This program is brought to you by realestate.com.au. Keep moving with Australia's #1 address in property.
Thanks for being with us here on Business Now. Let's see if that interest rate speculation encouraged home buyers over the weekend. Around the country, REA Group says there were just over 1,700 auctions, a clearance rate a little above 64%, so not too bad. Across New South Wales, 699 auctions, just under 65% of those were sold, which is not bad either. Across Melbourne, recent falling prices definitely picked up the buyer interest. 624 auctions, 70% were sold. In Brisbane, 89 auctions, just under 52% were cleared. Adelaide cooled off a little after a big run, 71 auctions, 63% of those were sold. In the ACT, 47 auctions and the clearance rate a tick above 68%. So let's bring in here Angus Moore, Senior Economist with REA Group, who joins me now. Angus, many thanks for your time. Look, it is important for the future of home values what the Reserve Bank does tomorrow, but just how important is it for the months ahead, do you sense, that key decision?
Yeah, thanks for having me, Ross. Obviously, one of the key things for home prices this year is going to be what happens to interest rates across, not just this decision, but really what we see throughout the year. Our expectation, pretty broadly aligned with what markets are expecting, is we'll probably see a few cuts this year. And that is part of why we're expecting that we are going to see home prices grow this year. Now, we're not expecting strong growth. And the reason for that is just that even if we do see a few cuts, housing affordability remains really, really challenging across the country. And so that's going to continue to be a headwind for growth. But as we see a few cuts, that picture will start to improve, and that is going to be a support for home prices.
Did that sort of, that inflation number out of America last week, did that give you some pause for thought, given the fact that the Reserve Bank wants inflation done and dusted here in Australia, whether that just might temper the expectations for so many rate cuts this year?
Yeah, look, I think that's certainly a risk. There's obviously a lot of uncertainty going around globally at the moment. You could too many things to point out on one hand at the moment. And all of those things the RBA is going to be watching and pretty cautious about. I think the other big thing that, if I was trying to make the bear case for seeing fewer cuts this year, the big thing the RBA is going to be watching remains the unemployment rate. It is still really, really low. We're sitting at 4% on the most recent data. We'll get an update this week from the ABS, which is, by historical standards, really very low and probably lower than what the RBA would consider kind of a neutral rate. That's going to continue to be something they watch because there is the potential that, as we get through this period where inflation does look like it's coming back down, if the labour market remains really tight, that starts to feed through into wages, feed through to inflation. To date, that hasn't happened, but that remains a risk.
So a really interesting one here. I mean, there's enormous political pressure on the Reserve Bank right now. They're independent. They're supposed to be immune from that pressure, but they are human beings. Do you sense they will be immune to that pressure or not?
I think the Reserve Bank never wants to surprise people either, and the fact that there is pretty wide expectations that we'll see a rate cut is probably a fair indication that they're going to be feeling pressure broadly to kind of maybe not conform, that would be too strong, but at least, kind of meet people where they are. Monetary policy never wants to come as a surprise or a shock, and, to some extent, if it does, that kind of tells you the RBA hasn't been communicating as well as they should be. So I would probably expect we'll see a cut. I think, a lot of people would be very surprised if we don't, and the RBA would want to have a really strong reason to not be doing so.
But one interest rate cut is not sufficient to turn around the momentum and the mood in the housing markets, and especially, say, the Victorian market, which we know has been the softest of all.
Yeah, that's right. One cut's certainly not going to hurt, and I think a lot of people will be very grateful for that little bit extra, but it isn't going to be a huge change. Where it will start to matter is, once we get later in the year, once we're expecting that we see a few cuts, 3 or 4 potentially by the end of the year, that's going to make more of a difference for both, existing mortgage holders in terms of what their monthly repayments are, but also, critically when we're thinking about home prices for borrowing capacities and therefore what prospective buyers are willing to pay.
Always good to chat to you, and many thanks for your time today.